Good afternoon, everyone. In today's video, we'll cover a trade in natural gas, which was our only futures market that gave us any sort of entries, along with a few stock trades as well in Twilio, along with FSLY. So let's take a look at each of these trades and then cover them in a little bit greater detail. So starting off with the natural gas trade, we had our entry come between that 10 to 11 a.m. Pacific hour, when price fell perfectly into our doomsday aggressive volatility box entry lines. This came up on our dashboard as well, where we had the indication that, hey, natural gas is giving us an opportunity to enter at the edge with an edge. So once price hits our doomsday aggressive volatility box entry lines, we're now waiting for our edge signals to come in place. And this is the indicator that then confirms the reversal that we're looking at. So now, if we fast forward just a little bit, we should see that price has now started to consolidate a little bit in natural gas right around our entry level, giving you multiple opportunities to enter if you were looking at this trade. So this entire time, it's on our dashboard letting you know that, hey, natural gas is a place where there's currently opportunity. And for those of you that have been looking at the Futures Volatility Box, we went all of last week without any entries and most of today as well. So when we started to see something on our dashboard, at least, that gives us an indication to trade, I think that gave us all the sign that, hey, this is a place we'd like to be a little bit more aggressive, especially to reward the patience that we've had over the course of the past week. So now if we take a look to see what happens, our stop is outside of the volatility box, and the bare minimum move that we're looking for is 14 ticks in the opposite direction for the buyers to be able to take price action. Now if we fast forward just a little bit, you should notice that we get the 14 ticks fairly easily, but that doesn't come without a whole lot of chop really. But then natural gas starts to take off and we have a really nice burst move up higher. Our second target is at the target line. So once we pay ourselves with that first $140 winner, our stop is then moved to break even. And our second target is at the gray dashed line from the hour in which the entry actually took place. And so that second stretch target was $240, I believe, that we were looking for, or 24 cents in natural gas. And that then becomes the entire trade. Once we get out of the second contract, that's the end of the trade for us. So now if we keep fast forwarding just to see what the actual price action looked like for natural gas headed into even outside of once we hit our second target, you can see that natural gas only continued to go up a little bit higher before then starting to consolidate between what is really our target line along with that cloud right here. And price has really just been chopping sideways until falling after that 3 p.m. open. So that was the only one trade in natural gas, which was good for a total winner of $380, $140 on the first contract, $240 on the second one, and that was our one futures trade. So now if we switch gears just a little bit, let's head on over to a chart of FSLY here, and we'll load up our stock volatility boxes. So here you should see we have two volatility boxes plotted, our aggressive and our conservative. So let's start with just the aggressive and then load in the conservative as well to kind of take you through what the entire day looked like. So if I hide this study here, you should now see we had just the aggressive volatility box. So our entry, or it comes onto our stock volatility box dashboard, which looks something like this. And we had it come onto our triggers tab right here, which is populating with live market hour trades only during cash session. But that's where we had the first indication that FSLY is something we want to be looking at. So once price hits our aggressive volatility box clouds right here, we're then looking for an edge signal. Now, we didn't get one on our 1 minute chart until price breached outside of the volatility box clouds, which then became your indication that, hey, we should be switching on over to a more conservative model to try and catch this move. Now, FSLY is a stock that I think has been on a lot of folks' radar, both as a result of Ophir tweeting a lot about it, as well as just a stock that's been really taking off in the recent few weeks. So that may give you an inclination for wanting to be a little bit more aggressive in buying FSLY, in which case you may have used the actual aggressive volatility box to build a longer term position. Again, keep in mind that's a longer term position and not just a short day trade. If you were looking at a day trade, that's where you would be using our conservative volatility box and the one that our rule suggested to use, where you can see just how beautifully these volatility boxes contained price action in FSLY, gave you an opportunity to enter at the edge, and really ended up being the really nice reversal point for the rest of the day in FSLY, right? Once we hit our volatility box clouds, you didn't really get any price better than that, any price better than our conservative volatility box for the rest of the day. So that's one trade, which was in FSLY. Another one is in Twilio, which has also been a stock that made a really nice move recently. In fact, if we go back to a daily chart here, you should see that FSLY has had a really nice gap up higher, and now we're looking to try and find places with a bias towards the long side. Now, unfortunately, the only trade that's set up in Twilio was a short. And if we take a look to see what happens here, we have our conservative volatility box plotted on Twilio. We had Twilio hit our conservative volatility box, and then you had a really nice follow through on the opposite side Not just once, but multiple times, right? You had FSLY hit our target line one time, then we bounced right back into the volatility box clouds before having another puke down lower, which really led to the rest of the day in which FSLY came down to near that 183.68 level before ultimately coming back up higher. So hopefully this gives you an idea of two different trades, right? One was in FSLY, in which you may have been looking for a long entry on a longer term position. Another is in Twilio, which was a counter trend trade, just to be perfectly clear. Twilio's been on a tear and you were looking at shorting it, but you can see how effective these volatility boxes were in terms of capturing that short and giving you a really nice profit potential. In the case of Twilio, just to compare what that entire move was, that was 3% from our volatility box lines. And if we come back to FSLY, you can see that in the case of FSLY, from our long entry, you had a total max move of 4.38%, but our actual first target was right around 1%, giving you both a place to take off some contracts or stock or whatever you're trading in terms of asset class, along with then being able to move your stop at break even and see how high is high, with that really ultimate goal being that second target line on the opposite side. So hopefully this gives you an idea of both trades in stocks and futures. Our patience was rewarded today for all of our Futures Volatility Box members. We've been in a little bit of a dry spell in terms of volatility, but today we had volatility return in the natural gas market, which gave us a really nice winner. And you can see that you only need one or two of these trades per week to really start to grow your account in a systematic, process-driven approach. All right, take care, everyone. Good luck trading the rest of this week, and we'll see you in the next update.